This is the chart of gold on the daily scale. What you see here is the inverse head and shoulders that I already mentioned before, and we just discussed inverse head and shoulders in the case of the Australian dollar. US dollar, we have also mentioned the inverse head and shoulders that exist that currently we have in many energy stocks. We have in quite a few indices of several countries, quite a few major blue chips of these countries, and it's amazing that you see the same pattern. And in fact, in some cases this past month, in fact it's not yet over, but we have seen an absolute breakout. As I go through this long video, you will see some examples of that, but we have seen massive breakout here on massive volume, unusual volume. You could not have a clearer indication where the market wants to go. You know, this is a long-term bottom preparation. There are quite a few names for this kind of process. There are, you know, you have, okay, the inverse head and shoulders, you have saucer bottom, rounding bottom, call it whatever you want to call it in terms of the technical analysis language, but at the end of the day, the market was hitting the lows here and was looking for a bottom. And the indications, if we follow the correlation with other markets, the indications are that gold is going to also deliver a breakout. And at this point in time, there are two, and there is one option really in terms of the wave count that I consider that's a 1-2-1-2, and that will be the first leg of the third wave on this scale. Of course, this is going to be subject to modifications as we go forward. It's always like that. You just have to take it. That's part of the game. Yeah, it's part of the analysis, the ongoing analysis. The things get modified and changed. What's important is that we are reading the main trend right. That's the most important thing. And here for gold to clinch that signal, that mighty signal, would be a breakout above the move line that you see here. And the price action up to now supports the idea that we are going to have that. Okay, I'm going to go now to the 60 minutes. And here's the run up right from the bottom here. We had a 1, 2, 1, 2, 3, 4, 3, 4, 5, presumably complete. I suspect that we have already started the correction, and I think we are going to probably go down. If I'm right, that's going to record the A leg of this correction, then sideways price action, and then another drop. We are probably going to see gold weakening and running down towards 1,320 and perhaps even 1,300 around here. Don't forget, it was quite a run. Going to 1,301 roughly would be 50% retracement. So that's not going to be the end of the game. If we get a nice 5-leg run here, and then ideally we get a triangle here, that will be the best of the best. That will tell us clearly that we have a B, and then the final drop, that will be our ABC. Gold will come back. Gold will come back in this manner. That should last easily 2 weeks. Okay, if we get such a structure, it comes back, it basically soars above 1,365, 1,370. You go long. You go long. You are going into a third wave. That will be spectacular stuff. Now, suppose Mr. Market doesn't listen to me, doesn't happen to have connection to the internet, and doesn't listen to me, then and it continues straight away. Yes, Monday, Tuesday, it continues straight up. Then what that will tell you is that the impulse wave is basically underway, and I actually missed something in my subdivisions here. Okay, that's what I would assume would be the case, but I'm reasonably confident that there is quite a lot to support the wave count that I'm presenting to you here. Take a look here. it appears to me that we terminated the run here. I could be wrong in this way. Look, the fourth wave might, yes, ended here or here, and then that will be a 1, 2, and that will be a 3, and that will be a fourth wave. So at the worst of the worst, we're going to see just a pop, yeah, a pop above this level, but then it's going to sink. That will be a top instead of here. Okay, if that turns into a fourth wave. But as soon as it breaks down under this level with 1,348 cash, okay, spot, it breaks through this level, you know where it's going. Most likely it's going down under 1,342 on its way to complete the 5-wave run that began from here. 1, 2, 3, A, B, C, D, E. Fourth wave, complete, break down, deliver the A leg. Okay, that will give us the A, and then as I said, sideways price action for about a week. We'll deliver the B and then the final plunge. And if the market really finished with a correction overall, expect a surge back to the previous high, and just gold is going to absolutely fly. Okay, here's silver. That's the weekly. Now, what is in play is the likelihood that that's an A, that's a B, and a C is coming. A C is coming. The support so far held very well, and although silver is trailing substantially behind gold, we have to allow for the possibility that silver will make it and will climb above 18.5. That will be a very important critical level for us right here. Okay, you're going to see the build up here of silver in the last few days. I take this to be a 5-wave run. That's one of the interpretations. I have to point out that despite all the, if you like, all the noise coming out of the gold market, yes, it's shining, it's running, etc., etc. Silver is really low key. It's really not delivering anything on the same scale, and in fact, the bearish, yeah, believe it or not, the bearish wave count is still alive. That's an A, that's a B, that's a C, that's a D. That could still be an E leg. Yes, that could still be an E leg. Why did I say that 18.5 is critical level? Because I think once it goes above 18.5, the bearish interpretation would really lose a lot of credibility, and we will look at that point, we will look at the run above 21. But I'm willing now to put silver on the path that gold has charted for us, and that means that on the 60 minutes here, I'm taking this as 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay, so we are going to correct. If this is indeed the first leg up, we'll have a correction that will easily see silver going back to 16.7 over the next week or two, going sideways. Next time silver comes back flying above 17.7, with gold doing the same thing above that high that registered just a few days ago, then that's the signal. We're just going to run up in the third wave. Okay, the other ABCs that you see here, they're all possible, but they are not, how can I say, technically they are possible, but momentum wise and correlation wise, they are not really favorites. You know, we can work with an ABC, X, ABC, and that will terminate the E leg, then call for silver to collapse. Okay, and you have another possibility. You take the ABC here as an A, you take all of that as a B, and then you get even another ABC like that that will be terminating a C on the black signal. These combinations are possible, but in short, you get the point. Going down the road of using the ABCs basically supports the E leg, which supports the bearish wave count. And I think that given what we have seen in gold, in the Australian dollar, in various other markets that correlate well with the precious metals, I think that this is not very likely now.